Hey everyone, John Henry here from School of Trade, and today we're going to be talking about one contract trading strategies. So, trading with one contract is just much different than using multiple contracts. And there's a couple things that are really important that you need to be aware of. Now, the first thing is it's really tough to eliminate risk without the potential to scale out. So you need to make sure that your risk reward on the trade it has to be in line. It's essential. When you're trading one contract, you've got to make sure that the risk reward is 2-to-1, 3-to-1, 4-to-1. Whereas, as an example, with multiple contracts, I can scale out at +5 and reduce some of my risk and take some of my profits off the table. I have a lot of flexibility with multiple contracts. But with just one contract, you need to be a little bit more pinpoint precise in terms of your risk reward. Now, the second thing is you need to have the knowledge of a specific market's personality before you start trading it. As an example, if you're trying to get a 50-tick target on a 3-Renko chart, you're going to have a really hard time getting that. Faster time frames, however, do make it more challenging to choose the right pattern for entry because there's just so many of them. If you slow the chart down, you might get maybe 1 or 2 patterns a day. But if you zoom in on a 3-Renko chart, a 2-Renko chart, a faster entry chart, you're going to see 10, 15, 20 setups a day. Which one do you choose? So that's the kind of personality that you need to get to know, which is a good setup, which isn't a good setup. Now the next thing is going to be that you must take every trade pattern you see. And the reason you want to do that is because trading one contract, it's really just a numbers game. This is very different than trading with multiple contracts where, you only need to get 5 ticks of profit, and you can move your stop loss to break even, and you can have a risk-free trade and all those other, quote-unquote perks of trading multiple contracts. With one contract, you need to take every trade you see. And the reason, again, behind that is it's just a numbers game. Over the course of a long period of time, over 100 trades, 1,000 trades, if you know that your strategy is always going to be around about 60-70% accurate, then you need to be on all of those trades to get that accuracy. So when you're trading a one contract style, we're going to assume that you're either new or you have a small account. Now, the reason we point that out is because new traders make mistakes. Just as in anything that you first start that you're new to, you're going to mess something up. That's just how it is. That's when you first start something, you don't know the ins and outs, so you got to kind of work your way through it. So keeping that in mind, you want to make sure that you don't have too much risk on the trade. You want to make sure that your risk is below 3% if possible, so you can have as much of a chance as you can possibly have to get those winning trades and get that 60-70% winning ratio. So you want to make sure that you keep your risk reward in line, as well as risking less than 3%, preferably lower than that if possible, but 3% at least. It all comes down to taking those baby steps. Your goal of trading one contract is to save your profits to begin trading with 2 contracts, and then 3, and then 5, and then, later on, if you're dreaming big, 100 contracts to buy that Ferrari. But you got to start small. You can't just start imagining in trading with 100 contracts. It just doesn't work that way. So the idea is you're not going to be hitting those home run trades initially with those one contracts. You're really just going for those nickel and dimes. You just want to pick up a couple ticks here, a couple ticks here, and build that base account so that you can start trading 2, 3, 4 contracts. Trading in simulation versus one contract in the actual market, many new traders make the mistake of moving to one contract on a live market, on a live account, too soon, when you haven't even seen the result on a simulator. One of the big things that you need to make sure that you're doing is that you see consistency on the simulated account first. There's no reason to believe that if you're not seeing consistency on the simulator, well, then you're definitely going to see consistency on a live market. It doesn't work that way. If you're not seeing consistency on the simulator, you're not going to see consistency on your live account, and that's just the way that it works. Trading one contract on a simulator, and just keep doing that until you've earned consistently 2 weeks of profit, and that's at the end of the week. Don't pay too much attention to the day in, day out. Everyone's going to have a losing day from time to time. It doesn't matter if you're the best trader in the world or whatever. You're going to have a losing day from time to time. But you want to look at the end of the week, at the end of the month. Was it a winner? Was it a winning week? Was it a winning month? That's what you want to pay attention to. And when you get consistent with that, then move to the live account. And one big thing that you want to keep an eye on is using market replay. It's one of the most important learning tools for a new trader, or even someone who's trading one contract that's been trading for a long time. To get that little little bit of extra practice in there, you can use NinjaTrader to lock and load a market replay. You can see what's going on, and you can replay any date that you want, and then you can trade along with it as if it was a live market. Now, there's a lot of perks to that. First of all, it's really good practice. If you're in the downtime or you're not during prime hours that you would normally trade, you can download Market Replay from a different day and trade that. Now, alternatively, if you've got one of those 9-to-5 jobs that doesn't allow you to trade during the day, you can still practice day trading. So you can download last week Mondays or 6 months ago on Thursday at 2 o'clock. You can download all of that information and practice trading on it. And the idea behind that is, you don't want to trade live until you've used Market Replay or at least reviewed over 100 trades. You want to get those trades under your belt, get used to it, get familiar with trading, and then start looking at going into the live market, get consistent on the simulator, and then go into the live market with a live account. And those are those steps that you need to take to get to that success. But you've got to start small with those baby steps. So that's taking a look at one contract trading in the different strategies that you can use. If you have any questions about it, feel free to send an email to School of Trade, and don't forget to check out our trial at schooloftrade.com. Have a good one.